The Philippines' investments are expected to boom in the coming years, led by the newly integrated regulation that now eases the foreign ownership problems in the past. But even before the new regulation was enacted, the Philippines was already an attractive investment destination around the world, and it has been going on for decades now. According to the Philippine Statistics Authority, from 1996 to 2021, the total approved inflow of foreign investments amounted to around $90 billion, which is a figure today that is roughly a quarter of the Philippines' nominal gross domestic product. So what has kept the Philippine investments on a relative level during the past decades? Before we move on, don't forget to leave us a like and subscribe for more. These investments were mainly driven by the sheer growth of the nation's economy, but specifically, amongst the largest bulk of investments that went inside the nation, a large bulk of it went into the so-called economic zones governed by the Philippine Economic Zone Authority, or PEZA for short, and along with other authorities as well. These economic zones are designated locations created by the authority to encourage investments, and they do this by giving better tax incentives for firms that operate inside the zones. So these benefits, and among others, have brought in a myriad of local and international companies that would want to take the benefit. Hence, it lured in a ton of foreign investments to the nation, especially into the business processing outsourcing and knowledge process outsourcing industry. According to PEZA, there are now over 4,670 companies residing in over 415 zones in the Philippines, ranging from information technology parks to medical tourism centers and manufacturing economic zones. And these zones have clearly contributed a lot to the nation, considering how big the BPO industry is, or even how big some of the other sectors mentioned are. Take for example Japan, a large investor in the Philippines, but more so in these economic zones. There are over 962 Japanese companies currently operating in these zones and have a combined investment that amounted to around $14 billion, which resulted in over $11 billion in export and also the employment of over 350,000 lives. Furthermore, the largest economic zone in the nation has also recently been announced, which is called the Chowson Techno-Industrial Special Economic Zone, which is a $2.4 billion project. The economic zones have played a really vital role in driving the Philippine investments. With the easing of foreign ownership, we think that these zones will greatly increase as the Philippines' economic outlook could increase due to this change, as it attracts more foreign investments and then results in a better market. And aside from that, we are also entering the world of digital in the Philippines. These digital growths are driving the next wave of Philippine foreign investments, and is not just because of its massive BPO industry. The Philippines is home to a very large internet community. There are about 152 million mobile connections, and the average user spends over 11 hours on the internet, which is, in all truthfulness, an excessive amount. But because of this, the internet economy grew, so much so that one of its sectors, that are e-commerce, is expected to have contributed to GDP of over $24.2 billion in 2022, which is a growth that positions a society as the fastest growing market globally. This shift in demand resulted in the construction of several infrastructure projects that need to support it, such as data centers, which are becoming more common in the nation, in part to accommodate the massive online growth. Moreover, the Philippines' digital growth has also kick-started the rise of the startup economy, which is filled with technology enterprises looking to make the next big break in the nation, and is one of the key sources of investments around the world. According to the Philippine Venture Capital Report 2022, the local startups had a record-breaking number after it raised over $1 billion in 2021, up from what was raised in 2020, which was around $369 million. These were spread out in over 92 deals, with financial technology, e-commerce, and entertainment being the biggest winners. The startup economy is primed not just for a robust 2021 year, but for the future. As the Philippines' internet market grows, this also means that the startups will try and occupy the market, which then impacts the amount of investments coming inside these startups. These investments, on the other hand, come from both local and international venture capitalists. The largest institutional investor by number of investments made is known as Kickstart Ventures, a subsidiary of Globe Telecommunications, which have funded Southeast Asian and Filipino startups called Igloo Home, a Singaporean-based smart locker company which raised $12 million in its most recent funding. NextPay, a Philippine-based digital banking platform with audience targeted to small businesses and entrepreneurs. Edamama, quite a unique approach as it is an e-commerce platform directly for mothers. And the famous rising live streaming services called Kumu. The largest independent network of investors, however, is locally known as the Manila Angel Investors Network, which has been part of several funding rounds in companies like Filipino ghost kitchen Mad Eats, tech-enabled exporting startup One Export, and agriculture technology startup Fortuna Cools that aims to help keep the ocean healthy, which is a key product as the Philippines' ocean environment is seeing quite a harsh damage. Lastly, Yield Guild Games, a player in the world of blockchain, which is taking on the world of crypto from the Philippines. This is probably one of the most exciting venture capitalists in the nation. After all, blockchain, NFTs, bitcoins, and the like have seen an explosion in popularity, and from what it looks like, it is going to become a huge market. With that said, Yield Guild Games has joined several funding rounds for these exciting applications in the crypto space, such as Jambo and Heroes of Mavia, or Crypto Raiders and Civitas, and much more actually. These blockchain-based startups are mostly aiming to have products or services that are aimed at the upcoming Web3, or as they say, the next generation of the internet. These three investment firms are just among the largest in the nation that is taking the entire Philippine investment landscape to a different level. Amongst these, there is also one sector that is slowly gaining traction in the Philippine economy, relatively small as of today, but for the future, it holds a large potential. And yes, it is no other than the electric vehicle industry. And hold up, you might think that the Philippines holds the potential to become a strong electric vehicle hub? Well, actually, it is because of the nation's abundance of nickel. According to the United States Geological Survey, in 2019, the two largest nickel-producing nations are Indonesia and the Philippines. And as electric vehicle experts know, nickel plays a critical role in producing lithium batteries, which are basically a critical part of electric vehicles. With the Philippines' position as among the largest producers of this ingredient, they will play a role in the future of the electric vehicle demand. Hence why today, the government has established key initiatives to support this drive, both presumably because of the potential in the nickel market, but also the need to have an electrified ambition for the automotive industry, and also as the competition starts to emerge as even Indonesia or Thailand have their own plans. Take a look at the in-house company that the Philippines have, namely the Integrated Microelectronics or IMI. It is a player that, according to its annual reports, has contracts with international electric vehicle firms all around the world. While it is unknown whether they use the nickel production as a base for their operations, it still shows that the Philippines is in a prime position to take the opportunity of this field when given to them. With these initiatives going on and local demand on the rise, these three are becoming key to the growth of the Philippine investment landscape and economy. And there are likely more happening than what we have just mentioned, far more that may have a far larger potential to make a mark in the entire economy of the nation.